Good morning, everyone. How's it going? It is 6 a.m., half an hour before the market open on Friday, May 31st, end of the month. Yesterday, we had the GDP report. We had some slightly negative news in terms of the GDP, but the market interpreted it as positive because it looked like it might be more likely that the Fed might cut rates. Today, I forgot, I did not notice, I should say, and I didn't forget, but I didn't notice yesterday that we had this personal income and outlays report, which is the actual PCE number, or contains the actual PCE number that the Fed looks at. We get a PCE number over here in the GDP report, but the one that Fed looks at is this core PCE right here. So a core PCE, we saw month on month came in at consensus, down a tiny bit. And then year on year, it came also at consensus and no change to the prior PCE. So what we saw yesterday with the GDP report was that the personal expenditures, consumption expenditures came down a little bit. And we have a matching report over here on the month on month, but the year on year is telling us well, it didn't really change that much. So this is a fairly neutral report. So let's see how the market is taking it. It's taking it very positively. So we have a bullish bias this morning, but it's mostly random. If we look at the S&P futures, we're right at 0.3, maybe 0.35%. NASDAQ, same thing. And the Dow at 0.18. So the S&P and the NASDAQ are just at the cusp of being non-random. Normally, we consider about 1/3 of a percentage point to be the cutoff point on what is random and not random. Given the low volatility that we've had over the last couple of weeks, 0.33% or 0.35%, wherever these are, 0.3%, it's a little bit more significant than it might otherwise be. But again, it's really at the edge of randomness. So I can't really say that we are definitively up. But this is more of the reaction that I was expecting off of that GDP report. And if you remember yesterday morning, what I was saying was that the TLT, given that it was bouncing up, and this morning's looks like it's bouncing up even more. So yesterday, what I suggested was, well, it looks like it's bouncing up. Might want to take that TLT short off. And then if we see it move back down, then we would put it back on. And so that was good advice, it looks like, because we are gapping back up or gapping up even more today. But we wanted to, so because the TLT was up yesterday and the VIX was coming off and coming back down yesterday, we felt that there was a somewhat lower chance that we would move downward in the SPY yesterday. And yesterday, for the most part, we were trading sideways until the last 45 minutes we sold off. So today, what do we expect? Well, same thing. The VIX is coming down. That TLT is bouncing up. We're at this 1370 level on the VIX. So I would really want to see us move lower, though. We break this low from a few days ago, or a couple days ago. And then if I look on this intraday view, what we see is that we've been at this level a few times over the last 3 days. This was the low we were talking about. We were just looking at. And there's this gap right here. So we want this gap to fill a bit and then break it down. And that would tell us that the SPY is moving up. So call it 1355, 1360. And if we see that VIX move down, then we'll be more confident that the S&P directionally will move up today. And then, of course, if we move the opposite direction and we break these highs, then we'll be more confident that the S&P will move down. So let me indicate that on our intraday chart. Let's do VIX. Let's do VIX over here. And we call it 1355, 1360. I'll do 1360 just to give us a little bit earlier warning. And if we see that break down, then that's positive for the S&P 500. So just like yesterday, well, technically on a daily basis, we said, hey, better likelihood that we're going to break down and move down towards that MA50, but we didn't say that it had to happen yesterday. It did happen yesterday, but then we're here near this EMA 20, and there's a chance that because of that PCE report, we'll bounce right back into this region. So if we break, it is still more likely to the downside. It's just that today, and given the low volume and the holiday and all this weird stuff that's going on this week, then we might just go back into range and then decide what we're going to do next week. However, the bias is still towards the downside. We're just saying, just like yesterday, maybe not today, but maybe we will get it today, just like yesterday we actually did get it and move lower. So that VIX will be an important indicator for us today to see whether or not we are going to move towards that MA50 today, or we're just going to wait over the weekend and do it next week. TLT, CPC, oh, dollar. We haven't looked at dollar for a while. And see, we had this downtrend, and then we started to chop sideways. So we're going to see what is going to happen further. So with this, we need to see this either break over here or break above over here. Right now, it's just chopping sideways. If we break lower, that's a weaker dollar, meaning that commodities will be stronger, energy will be stronger, gold will be stronger. So that will be a good indicator of what might happen in these metals. You can see that metals has been sort of chopping sideways also for quite some time. Let's see how well the dates match up. Okay, so we kind of waved up and then down, and then May 15th. Okay, so that wave up is associated with this wave down, and then sideways chop in the dollar. Well, May 15th looks like we not as much sideways, but if we drew a similar region, we just didn't see a big peak above like we did in the dollar. And then crude oil, definitely been chopping sideways. So if the dollar breaks down, then crude oil can move up. Okay, let's see. We have our, well, I don't know if we have any more. Let's say next week. CrowdStrike, Dollar Tree. Okay, we have some fairly important companies reporting next week, but you can see that we've slowed way down. There's not a huge list, and the market cap of the stocks are not nearly as big as the ones that we've seen earlier. So right now, I can't, let's see, can I see next week? June 3rd. Yeah, nothing super significant in terms of economic data. The only real one is this unemployment data on Friday. That's the only one I can see off the top of my head or at this quick glance. So it looks like we don't have a lot of catalysts coming up next week. We don't have the earnings, or we have a lot less earnings. We have less significant economic reports. So that means we'll probably trade technically next week, as long as we can get volume back into the market. So we've been just slow the last couple of weeks in terms of volume. It's just been really, really low. Normally we don't go huge periods. So this was another longer period below that moving average, but this is longer. Actually, significantly longer, or like twice as long. Let's see what happened in the previous one. Okay, and so it was kind of a grind higher, just slow grind higher or sideways. You can see in these super low volume areas, it was a sideways choppy movement. And we've got low volume and we went higher and then sideways choppy movement. Okay, so very similar pattern. But if we continue to have low volume, then we'll just kind of drift. We might chop sideways, we might very slowly go down. If we actually do get volume, then we'll trade very technically. So we'll probably hit that MA50 and bounce right off of it is the most likely possibility at this particular moment. But again, like I've been saying over the past few days, we can't really determine that until we actually get there. So, we'll just say that if volume comes back, we'll come down to the MA50 over here, and then we will see from there if the higher probability move is to bounce and go up or to break down and come back to the MA90 or all the way down to that MA200. Based on everything that we went over yesterday in the post market, at least currently, it just looks more likely that we'll bounce off of that MA50. Yep. So today, not a lot going on this morning. The excitement from the PCE report looks like it's tapering off. Okay. But we'll see at the open because we are opening fairly close to that 524 level, and our tendency, 70% chance that we move towards the previous close, at least sometime in the first 1 to 2 hours. After that, the data is unclear. Then it becomes random, whether we go up or we go down. So what we'll want to pay attention to is these levels. So 524, if we break 524, we'll go to 522. If we break 522, then we could go down to 520, maybe 521. I don't see this one as a very strong level, but so maybe 520. And if we get a lot of weakness, then we'll go even lower. Or to the upside, that 525 shouldn't be too much of a challenge to get through. And so we're looking at that 527 up here. And once again, we'll just watch that VIX very carefully to see what it does. Does it come down through that level at the open, or does it move back up, or does it kind of drift sideways? Given that it's a Friday and that it's month end, we may see some activity due to month end, but given that it's Friday and we've got the weekend and it was a shortened week, it might just be a kind of ho-hum type of day and we just chop sideways. We've had a lot of those days, a lot of those days recently. I'm not going to be too expectant that we get strong movement. And it may be one of those days where, hey, just like portfolio managers are doing, let's take a look at our portfolio and rebalance it and make sure that our positions are in line with our view, and then just call it the day and enjoy our day. So it might be one of those days where it's we take it easy. We're not trying to go crazy, go into new positions or take on risk. We're not trying to super day trade, especially if there's low volume. And we just get ready for June and position ourselves appropriately, which at this point would be neutral. And if we were to have a short-term portfolio, slightly bearish, but for the most part, neutral. Okay? So that's going to be my game plan for today. Take it nice and easy, glide into the weekend, and just make sure my portfolios are neutral. All right, so that's it for today. Have a wonderful rest of your day. And actually, it is Friday, so there will be no post-market session. So I'll see you at the weekly market.